Welcome into the Crypto Bunker podcast. Right now, we're looking at the ETH Bitcoin ratio, and it did not break down below the 200-day moving average so far in December. This is a big deal because traditionally, Ethereum underperforms um, in December, especially in a bear market, if we are in a bear market. So it's a good sign so far. I do think we are going to break out in ETH Bitcoin terms, especially in January. We do have the 4 hourly lining up pretty well, and now actually the 4 hourly is crossing into a full, I would say, short-term bear market, or sorry, short-term bull market so far, um, because we have all of the moving averages in order. They're still skinny and they have not extended out yet, but obviously we were in more of a bear market short term, from this September high where, the moving averages were in the opposite order. And obviously that was not good. And the 4 hourly 200 moving average has been essentially on top since the end of September in this asset. And so we can see what happens when they go in order. Obviously, this started last time in July, I believe, when we went in order again. So that was the start of a huge bull market for really for all assets. When we look at Ethereum in general, we are also seeing Ethereum trying to break through the 200 4 hour moving average as well. So we're not quite there yet for ETH. My expectation is that Ethereum um, will rally from this level, and we will probably get to around 33, 3,400. Um, and from there, I think we will probably correct back, but we may not. We may just explode through and just keep going because I think the problem that will be happening is that there will be a short squeeze. So I do see us at least going to the 150-day moving average. That's the one that's coming down, so it has the more staying power. And a lot of my analysis, by the way, guys, is not based on moving averages. These are just like trading sort of, you know, ideas for short-term movements, but within the next 3 to 4 months, maybe even 7 months, I expect a raging bull market in crypto. And a lot of people may turn off at that point because they're just like, oh, if you have a bias, maybe you're short or maybe you sold your stuff. So you're just like, I can't even listen to this. But maybe you're still holding on. If you are, I would, not financial advice, but this is the time where you want to be accumulating, not necessarily going long at this point. It's still neutral trend on the Hedgeye process, just so you guys know. So it did flip from bearish to neutral, which is a really good sign. We also have Quad 1, which is coming in January, February, March, and that is increased growth and slowing inflation. There's a ton of catalysts coming in 2026. We have the midterm elections. They're going to pump markets for that. We have fiscal dominance coming back into play with the big, beautiful bill going through and the Treasury spending that money that was allocated. We have companies spending CapEx on AI. I do think we're just at the beginning of the AI trend. I'm not a huge fan of what is going on with AI CapEx, data centers destroying the earth, things like that, obviously. But we have to be objective within our own process. So when we think about our own emotions, when it comes to trading or anything in life, you want to be objective. You want to follow an objective inner process. And And so, you just kind of want to be calm and you don't want to trade on emotions, obviously. So, um, we can trade on what is happening in the world, and we can try to change the world to make it a better place through things like decentralized finance, being able to give people access to their own private keys, their own wallets, and manage their own money without having to go through a bank, without having to go through, a process of getting a loan from a bank, which is very difficult. Um, we can actually go to Aave and we can get a loan. We can put as much money as we want into Aave as collateral, and then we can actually withdraw dollars to use for whatever we need it for. And we probably will pay a lot less money for that than you would for a traditional loan. Probably, in the order of magnitude of, 30 to 50% better rates for that. So it's obviously better for humanity when we have a peer-to-peer system, when we can have a decentralized peer-to-peer trading as well as lending and borrowing. And you don't have to worry about a credit score. Everyone should have equal opportunities when it comes to getting a loan, and decentralized finance helps to do that. So, we can look at at Aave, the Aave chart as well. Um, so the Aave chart right now, it's recovering, still. And obviously it's in sort of this bear market phase, and it's climbing, back up a little bit, but it's still down significantly from where it was. Um, I think that this is a pretty standard correction for an asset that's this volatile. I still think that we have this kind of cup and handle that's still in play. I'm not sure if you call it exactly a cup and handle at this point, but we do have still this chart to show us the way, which is the Abra silver chart. Obviously, it had the Abra silver chart had this massive correction here. That's kind of what we got here. So I would say, it's something like this, except obviously it's just not going to be the same. But we can look and see what happens when things have a chart formation that is like this with a huge cup and handle formation. Um, we could probably even look at it on like a monthly scale just to kind of see where we're at as well. But right now we're in between the monthly moving averages. And so it's probably, that means it's a decent time to accumulate. The monthly moving averages are very skinny still. I think that honestly, what all this shakeout was of October 10th and et cetera, um, to me, it's really a transfer of wealth, unfortunately. And it's a transfer of wealth from the traders who were leveraged and who were trading perps and doing all the things like that, to the people who are more patient, to the bigger players who want a position in this asset class. I do believe it's kind of like organized crime. What happened on October 10th, it's essentially a crime syndicate that is going on within the Binance exchange, and this is the problem with centralized exchange. It's pretty funny that Trump pardoned CZ right around October 10th. I can't say if it's exactly on October 10th. I actually could look it up real quick, but um, I just think that what happened there, when did Trump pardon CZ? So I'm not sure. So yeah, he pardoned him October 21st. So they didn't want to be too obvious, but to me, everything that's, there is crime that happens in crypto, and the Binance Oracle sort of, went offline or whatever happened. In my opinion, that was an organized hit, and Trump essentially was involved. I don't know to what degree. I think that people underneath him were much more involved. Obviously, we did see a massive trade that was opened almost at exact timings of October 10th at the right times and then closing it at the right times after that liquidation. And there's really no explanation for that they would know that Trump was going to make this announcement. And the fact that he made the announcement after hours on a Friday at 5 o'clock really put everything into an illiquid position. And, I just believe that because Binance and these centralized exchange, they hold a massive amount of a lot of these tokens. That's kind of what, and then they control the Oracle. So it's not like decentralized like Chainlink. Um, and so I think what happened here, you can see this October 10th crash on Aave. It really almost ruined the entire chart of Aave. In fact, I sold all my Aave when it came back up around this 220 level. So it sort of just went all the way back up to almost like where it started. And I said, no, I don't want any part of this because this chart is broken. And it just doesn't look, it'll never look right again, right? It will just never, it will never look the same, really. Um, and you can even look back at the chart. I mean, there's just nothing like that. And I think that what happened was, again, I think that this is a transfer of wealth, and I do think crypto is going to have one of the best years of its existence in 2026. A lot of people would disagree with that. I think that's a good thing. I think it's a good amount of bulls and bears. I would say right now it's probably 60% bulls, maybe 40% bears, something like that. And I'm not on Twitter anymore, so I wouldn't actually know what the discourse is like. Obviously, right now, um, the fear and greed index for crypto is at, I think, a 20, something like that. So you can use that as like a sentiment indicator. So it will say, you could say, well, are 80% actually bears if it's like 24 at, fear of 24. But we basically maxed out this indicator. This is the lowest that it's ever been for the coin market cap fear and greed index indicator. Um, we can also take a look at Bitcoin, but you know, we'll see kind of what happens. But it does look like it closed above the monthly moving averages. So if I just take away these drawings here, you can see that that to me looks like a bottoming process. There are a lot of people who are thinking, OGs are selling. It's not necessarily the case. OGs are writing covered calls, so they're actually writing against their upside, and that means that could actually create a gamma squeeze on this asset class that actually will go up because then those hedges have to come off more and more as we go up because those people are capping their upside. So they're saying, I don't want any upside above 120K. I don't want any downside below, 90K or whatever they want to do with that sort of strategy. And that's essentially what Matt Hogan said on the Empire podcast today, that they're writing a lot of covered calls, and so are a lot of other companies. So, these OG whales are sort of capping their upside because they've made so much. But what we heard from Larry Fink is that there's these sovereign wealth funds who are buying Bitcoin and they're holding it for the long term. So we have, Harvard endowment increasing their exposure by 3 times, 300%. We have the Saudi, sovereign wealth fund buying, confirmed by Larry Fink. And he's saying they're holding for 30 years. So, I think that the BlackRock ETF holders and the ETF holders in general are longer term holders. And that's a lot of really what the market's trying to figure out. Is this just hot money? Are these people going to give up on this asset when it goes down or when it's volatile? We've had 3 straight months of it going down. And I think at this point, we are looking at a good buying opportunity. You usually would not get a buying opportunity like this at this point in the cycle. This is similar to me to 2020. Actually, it's around the same time when we did have this correction in 2020, and Bitcoin kind of was struggling to get above its all-time high of 20K. Then in the end of December is when we started breaking out. So there's a lot of things coming for crypto that are bullish. I would say, the main things are like the Clarity Act, the Market Structure Bill. Um, we have also tax loss selling that's probably happening at this point because, if it's down for the year, people will then harvest those losses. So right now, Ethereum is down for the year. It's barely down for the year. Some people would say, oh, that candle, it looks like a mega top, but we have yet to close the year. I do think we'll close the year up because I think that we're about to see sort of a front running of the buying that will come in at the beginning of January, probably like January 5th or so, I think is a Monday. And I think that that's really when the buying will start. And that's kind of the same for DeFi as well. That's kind of when I see the buying really taking place. Um, and so yeah, I'm extremely bullish um, on this asset class, and I really think that Ethereum hasn't even had a bull run yet. I mean, honestly, it's sort of it's been trying to break out. Um, I think you could actually take a look at the gold price. And the gold is interesting. I really think that gold is like close to being at a top, but again, I don't want to, it's hard to call, but um, we could probably say that the Ethereum chart is actually pretty similar to this gold chart. Um, so let's just see if I can make this work because you can probably see what I'm talking about already, but I just want to make sure that I highlight this because Ethereum is in this sort of like long-term accumulation, sort of like cup and handle situation. Um, and so, I do think we can take a look at kind of what has happened for gold, um, and kind of see where that might be happening here. So, um, there we go. Yeah, so obviously, super bullish if this happens, but we can see essentially here that this is kind of the pattern that played out. Um, gold basically, I would say it almost it did like a try to do a triple top. And I remember people saying when it was at this point in the gold cycle right here where Ethereum is now, it basically like you can see it had this major washout. That was the buying point, which is just like ETH. We obviously had this huge monthly, doji candle that, went down to 1300 and closed at 1800. Actually, similar price as well to gold, sort of, um, before that happened. And then we ran to new all-time highs, just like gold. And then we kind of sucked that liquidity in that like everyone wanted to go long and said, oh, we're breaking out, we're at all-time highs, we're going to keep going. Classic. Then we come down and really correct and shake everybody out before the actual bull gets started, right? So that's kind of what we're looking at here with Ethereum. Obviously, I'm not saying it's going to go to $1 million like this is sort of projecting, but I do think Ethereum is like the most undervalued asset for what the potential of it is in the world. And I think the reason is that like also everyone is just short on Ethereum. It's very like OG centric. Like people who are in Ethereum are in it for life. And people trade it and things like that. But there's not like like the institutions are like just starting to even like knock at the door regarding Ethereum. And so and when you listen to crypto podcasts, they just hate Ethereum so much. I mean, every single even Bankless hates Ethereum. I mean, there is no one who owns this, and yet it is $374 billion asset. So what is it telling you that we're holding these levels um, in the face of such bearish sentiment for Ethereum? We're making higher lows on a monthly time frame. We're making a second higher low on a monthly time frame. We can say this was the low. This is the second low. So if I'm going to, again, remove all these drawings, I'm taking this and I'm starting a trend line. This is just the beginning of that process. It's almost like a bottoming process. It's not even close to being something that is, um, going into a bear market or something. Um, it doesn't, these red candles have not even registered on the on a monthly scale for the MACD, which is telling you that you want to be a buyer because they should be registering by now. And they just haven't. It's more just like a soft green. And so these are weaker sellers. You can't say that necessarily for the weekly. And to me, that's because of the washout that we've seen. It's just been so significant. But if you look at even like, let's say we look at a 4 hourly of this, you can see that this recent sort of shakeout that happened Sunday morning was very weak selling. And it got bought up very quickly. But then now people are selling that. So people don't really know that just tells me that people don't really know what to do here. They don't really know where they're at. And to me, that's how it's possible to take advantage at this level because people don't really know what the regime is next. They're trading like strictly on this like short-term price action. They don't actually know what's the economic regime that we're entering into. And we can say, pretty much for sure that we're definitely going to get lower inflation numbers for the next like 3 or 4 months. And we know that we're definitely going to get fiscal spending. So we're going to stimulate the economy through that. We're going to get lower taxes, which is also a stimulus on the economy, which you'll get, those coming through in April. So there's just a lot of bullish factors that are coming in. And I think that, for ETH to be teetering on the line of like this 4 hour 200 candle to me, it signals to me that the market wants to go higher. This chart to me, we've done enough of the shaking out. I think we've had the original bottom, then we had this shakeout, which a lot of people are like, okay, it's definitely over now, right? Like everyone sold that bottom. Then we had this shakeout, which was yesterday, where we actually went to 2,900, and that got bought up immediately, very hard. And now we're just flirting on the edge of a massive breakout. And when we break this 200 4 hour moving average to the upside, it's going to be explosive. So what's going to happen is it's going to go almost immediately to the 200 moving average, I think. Well, it will definitely go to at least the 100 moving average, which is now, 3,400, something like that, 3,350. So that'll be I think, an easy target for the first target. I think it's going to be, then we'll see sort of what happens. I know everyone's talking about the Fed and everything, but to me, the Fed is kind of like a null and void. I do think that the rates will come down because of the economic situation, not necessarily because of what Powell says or doesn't say. They're going to cut rates, and he may throw a tantrum and be like, "Oh, I'm I'm hawkish or something." I just don't see how that is going to happen. They've been wrong about tariffs being inflationary. Um, and so now I think we're going to see an explosion to the upside from here. And I think that honestly, today is one of the last days to buy at these levels. Although I do think it will rally probably to 3,500. We will check back probably around 3,300, and maybe you're a buyer there. But I think that again, there's so much short sentiment. There's so much bad sentiment that crypto is at risk for just going straight up, right? Um, it's sort of similar, this is what happens in crypto. Like you don't really get too much of an opportunity and then it's just gone. We can see here we rallied immediately again to that 100-day moving average. Then we just chopped. I don't think we're going to get that chop this time. I think we go straight to the 200 moving average. And that is around 35.30. So that's kind of what my opinion of what's going to happen. I don't, the only thing, in terms of Bitcoin, I'm less bullish on Bitcoin for this sort of rally that we're going to see next year. I think Bitcoin could go to 150K, but I think ETH could go to like 10K. So I think that ETH will significantly outperform Bitcoin, especially in this quad one environment. I actually think altcoins will do really well, if they have a fundamental use case like Aave, and they have catalysts like Aave as well. So I hope you got something out of the video today. If you did, please like, subscribe, and have a great rest of your day.